Gotcha. You're back.
Word on the blockchain. Wait, so does that mean you can change the name of your channel and you maintain all your followers and everything?
Yeah, basically.
Hmm.
Pretty cool, actually.
Nice. Yeah.
We did
And
do
then
that. So
the voice channel that the Discord voice channel we're going to be on, like right now we're in a call, but I kind of like the idea of doing it in a voice channel so others can hop in and just chat with us, unless you don't want to do it that way.
yeah,
If we do that, we could just hop in a Digital Wind voice channel if we wanted to. If you wanted to have more control, we could set up a stage channel on Digital Wind real quick.
Yeah, I've talked about that with Depeche Note, actually. But yeah, I mean, it's me, you, the crypto crash, and our 2,000 viewers, Rhett.
Yeah.
All right, as long as my
Three
CPU doesn't.
viewers right now.
Yo, let's go.
Let's see. I'm gonna post about this in crypto.
All right, Leo,
So
give us a
what?
shout if you're out there, bro. Well, my dad is calling me. I wonder if he just got that crypto night notification. He's like, "What's going on?" Here, I'm gonna field this call. I don't know why.
Like what? Like a poster.
You know what we need, Rhett?
Yeah. What?
We need a, you know how when you run for president they make posters of you with that like red and blue kind of stylized nature. We need one of those for Rhettship.
That's a good idea.
Yeah.
Hang on,
Yeah.
hang on just a second. Hello.
Yo.
I'm posting on Digital Wind right now that we're on. And then do we want to hop into like that crypto hangout chat in Digital Wind?
Yeah.
If we
I
do
mean, if
that,
that's
can we be on video?
that is well, we should be able to. I'm getting some weird issues with the laptop periodically here. But like I don't know why, but the CPU speed will just drop a bunch and it's like throttling, I guess. Maybe I need to give it some cooling pad power. Give me a sec. We feel you, Kryptonite laptop. It's hard to do things. But the crypto world needs us right now, so we're going to need you to go ahead and work better. There it is. That sweet, sweet cooling.
Word on the blockchain. I like that.
What is the word on the blockchain, Rhett?
Good question. I think we're all down bad. ETH down 30% on the last 7 days. Bitcoin down 20%. Not that I usually follow prices too closely, but What's Ohm down on the last 7 days? Ohm is down. Can't see.
Yeah, so you want to do the you want to just do an open chat about in Digital Wind?
I think so. Yeah, there's that crypto voice channel. So let's do
Keith
that.
GS Crypto Kangs. That's I don't. It's hard to feel like a king today, Keith.
What's up,
Gotta
Keith?
say.
I've been meaning to follow up with you, Keith, about restarting the stream, but yeah, we're going to start doing this one once a week, and then I'm going to be doing another one every day. So happy to have you join any and all. And
we got Rhett back on the air, Keith. That's
that.
what matters.
What's that?
We got Rhett back on the air. That's what matters.
And the fact we have Phil on the air. I think we hop over to that crypto voice chat, and then I'll also post a link to it in the in the Twitch so that people can jump on who aren't already part of that. What do you think?
Let's do it. I think, especially for this first time, just to kind of add. Hey, the only problem with that, Rhett, is we lost your video.
Now it's back.
Okay. Now how do I access that video? Click on Rhett. Pop out window. Yes. Okay.
What's up, Red Rock?
First time chat from viewer Rhettship. Wow, who is this guy?
Who knows who that guy is?
The so-called border czar failed to visit the border roughly 100 miles away.
And Keith, are you Mr. Red Rock?
Yeah.
Nice. Glad to have you.
Welcome, Keith.
Hey, good to hear from you.
Yeah, you too.
All right, so
Oathbringer's on. Yeah, nice.
Oathbringer, nice.
You have a little bit of background noise, Keith, so maybe I would maybe mute yourself except for when you're talking, so you don't hear the TV going.
Yeah, that'd be helpful.
Nice.
All right, I can finally breathe. I've been scrambling to set this thing up. Somehow it slipped my mind that all of the Crypto Night / now Word on the Blockchain streaming assets and configurations are all saved on this laptop and not on my usual streaming computer. So I was freaking out there for a bit. But we're good. I can finally breathe, and we are live, and we can talk about crypto now.
Whoa. Nothing I'd rather talk about.
I just noticed that we got 2 followers in the last 2 hours, Gemini Bro and Johand. So maybe those were people that you were talking to about this, but I mean, what do you want to talk about, Rhett?
Oh, good question. What do we want to talk about? I
or what does anybody else want to talk about? Like want
Oathbringer, Red Rock. If either of you guys have something you want to talk about with us, or if we can do it any way you want, like open conversation or Q&A or whatever, Yeah. But I don't think we need to kind of claim that we're here to, we're the, I don't know.
We really just went live today without a ton of preparation because we wanted to restart this machine. So that's why we're here.
Yeah. Yep. So if you're like, hey, let's talk about I don't know, this asset, or hey, what do you think about this DeFi protocol, or here's what I think about this, whatever you guys want to chat about today.
Maybe
Oathbringer. And then if people want, we can do more prepared stuff in the future. But right now, we're just thinking we'd do it casual.
Yeah, for sure. Maybe Oathbringer can give us a price update on the Chumby. Let's see. I can
tell me what
pull
that is. What is the Chumby?
So Chumby.
Honestly, I haven't checked, so I don't know.
Well, I mean, everything is crashing, but I'm wondering if the price of Chumby in ETH is crashing or not.
Since we all denominate in ETH anyway.
Yeah. Do you have the stream chat open?
Yeah.
Rhett, you've got the stream chat open?
I do, yeah.
Okay, it's Chumby Valley official, I think, on OpenSea. So I'm pulling it up here.
Chumby Valley.
Floor price 0.665 still. No movement on the Chumby price. Wow.
Yeah, it's been pretty flat. It looks like.
Well, that's good in the market like this one.
Yeah, right. The only problem is the underlying ETH has been shaky at best.
Yeah. Yeah, ETH's down. It's not down as much as a lot of things are, though.
Let's take a look, actually.
Of all my assets, the ETH is probably the second best performing over the last month,
Bitcoin down to 35. Ethereum down to 24. Hurts to see, my friend. Hurts to see. Down 26% over the last 7 days. Outperforming Solana, though, down 35. Jeez. Polkadot down 33. Avalanche down 33. Shiba down 35. Polygon down 34. That one hurts, man. That one hurts.
Polygon's doing some cool things, I think.
Where's my ZK roll-up value accrual, Polygon? My gosh.
Yeah, I think that aspect, by the way, they have at least one live ZK rollup, Hermes or Hermes, I don't know how they pronounce it, but it doesn't have a ton of ecosystem built out yet, and then the others are more in the R&D phase, at least so far as I'm aware. I think if they execute on those and they get like application traction, that's where you'll see some serious upside. But that'll take a little bit of time to kind of make itself known, I think.
Rubicon Punk, welcome. It's underperforming ADA and XRP. Which asset are you referring to?
What's up, Rubicon?
Ethereum?
Oh, ETH. Yeah.
Let's see. XRP down 21%. Oof. Last 7 days. Solana, or let's see. Cardano, only down 16. Wow. Cardano's interesting. I saw a report this morning that SundaeSwap is having serious network issues.
Yeah, I hopped on a Twitter Spaces with SundaeSwap, just kind of listening in to what they're doing there, and curious on how that would turn out. I know some people had some concerns over the kind of the way that the ADA blockchain works, whether that would create kind of bottlenecks in dexes. So I've been curious to see. I don't have a strong opinion on it, but there's a question here by Large Croissant.
Large Croissant. I have a sneaking suspicion that is our third staff member, Rhett, Leo.
Oh yeah.
Not positive though, but pretty sure.
Is Leo a croissant lover?
I don't know actually, but for a while there, his gamer tag was croissant, and now it appears he's upgrading the size. So, but yeah. His great question though: difference in ZK rollup over regular rollup. I'll say a high level thing, and I'll let Rhett take it away because Rhett can go ham on this one. So ZK rollup uses mathematical proofs writes mathematical proofs to the blockchain that prove that these transactions happened, and it can do that in a short period of time, but there's a processing cost there to do that. A regular rollup, or what I'm assuming you mean, is called an optimistic rollup, like Arbitrum and Optimism are two examples of that. These are rollups that have a 7-day, what do you call it? 7-day fraud settlement period, Brett? Upon not unstaking, but rather withdrawing from the protocol. So ZK rollup doesn't have that limitation, but requires processing to do those mathematical proofs so that it can be verifiable immediately.
Yeah. So to add to that, I think so. You said that a ZK rollup does a mathematical proof to prove that transactions happened, but also that they happened, that they were valid, right? So like an invalid transaction, for instance, would be if I sent the same Ethereum both to Phil and to Keith GS. And if I sent that same ETH to two people, that's a double spend. It's invalid. So the ZK are these zero knowledge proofs proving that this bundle of transactions is valid. And they bundle up those transactions and settle them together, and so it ends up being a huge cost savings over settling to ETH directly.
Sorry, I totally missed that bundle of transactions aspect.
Yeah.
It's not on a per transaction basis. That's exactly right.
Yeah. Yep. So yeah, there's pros and cons to Optimistic versus ZK. So Optimistic, the main pro for Optimistic is that it has very little, like almost no upfront computational costs. There's some, but very little. ZK has very large upfront computational costs. But with ZK, once the proof is done, it's very cheap to verify, and so you have very short withdrawal times because the proof that was made at the time the transactions were settled already proved in a way that it's easy and cheap to verify that those transactions are valid. Whereas with the optimistic, they call it optimistic because you're taking the optimistic view that the bundle of transactions is valid, and then later on you have this kind of window where people can kind of like dispute if there's something fraudulent or whatever, and you have these like fraud proofs and things. So there's Arbitrum and Optimism have like 7-day withdrawal times. ZK has none. There are actually one of the roll-up solutions that is in kind of the R&D phase that Polygon's working on is a combination of both. So you could kind of get the best of both. Where, say, for example, you are doing these optimistic bundles that you're settling several times a day, and then maybe once every couple of days or maybe once a day, you do a zero-knowledge proof that proves all of those optimistic bundles. So then you kind of get a little bit of the best of both worlds. It's not deployed, so there's there's questions there, but it seems to me, from what I understand, it's like a valid approach.
What's the protocol name there?
Well, it's one of the rollups that Polygon's working on. But that same approach could be taken by a lot of these others, right? And you could go in either direction. So Arbitrum could say, hey, we want to shorten the 7th-day withdrawal. And there's these other problems too, where there's state creep, where with Arbitrum you have to, and optimistic rollups, you have to kind of store more information than with a ZK roll up. So you could say, as Arbitrum, you could say, hey, we're gonna roll out Arbitrum v2, and it's going to have zero-knowledge proofs that once a day kind of prove all of the optimistic transactions that happen that day or whatever. And you could go the opposite direction, where Starkware could say, hey, we're actually going to start settling, optimistic bundles, and then use our ZK Starks that they invented the Stark, and really smart cryptographers over there. They could say, we'll use our Stark technology to, instead of proving the transactions themselves, we'll prove the transactions that the optimistic kind of bundles were doing. So anyway, there's kind of pros and cons to both. I think both have a huge place. One of the other advantages, by the way, of like a zero knowledge is that if done in a certain way, you get privacy for free, because you can use those zero knowledge proofs to add scaling, but you can also use them to add privacy. So then you can just kind of get both at the same time. And that's actually the focus of one of the other Polygon rollups that they're working on. It'll be more privacy focused. So there's some great things about that. But the downside, where people have talked about, well, hey, with Arbitrum and Optimism, you have these 7-day withdrawal periods, and that's a big downside. I think that downside's like overstated, because for one, very few people who bridge into those systems are interested in bridging out. Like if you look at money going in versus out of Arbitrum, it's basically a one-way thing. And if you're like, well, hey, what if the market's crashing? I want to switch to stables. Well, there's stables in Arbitrum. You can just switch there. The bigger thing is like if there's an application you wanted to use on layer 1 that's not on Arbitrum yet or whatever. That over time, there'll be fewer of those anyway. And then there is another kind of workaround you can do for the longer withdrawal times, where you can have a bridging protocol, say like Hop protocol could say, hey, we are going to allow people to provide liquidity on either side of the bridge, where I could go and deposit, say, Ethereum on one side of the bridge, and when Phil withdraws, he actually immediately gets my ETH, and I'm waiting his withdrawal time for him, and he pays me some some fee for doing that, and then you replace a long withdrawal time with a small withdrawal fee. So it's like, okay, that might be an easy workaround. So anyway, it's probably too much to be said, but really cool things happening.
Very helpful. I actually didn't know the focus of the Polygon ZK rollup products, so I learned a lot there. And that's one of the reasons that I like Polygon, is they're really making a lot of moves in that space. So that's cool. But yes, regular rollups are often referred to as optimistic rollups, and ZK rollups use mathematical proofs to settle transactions to the blockchain immediately. And there are some in-between solutions, is what we're learning here from the great Retship. Check them out over at Alpha Finance in the coming days, actually. That's going to be lit.
I'm going to start daily streaming, and I'll be on a Discord voice chat like this, but it'll be on the Alpha Finance Lab server, and then I'll post my my Twitch handle, but I'll be on Twitch simultaneously. So for anyone who wants to join, and it won't be all like Alpha Finance like focus. It'll be like, if you want to hop on and talk about, hey, how do I use Alpha Mora, or what are the risks of doing leverage yield farming, we can talk about that. But if you want to talk about, I don't know, wallet security, we can talk about that too. Just down to chat.
It's going to be cool. I think that's a great initiative that Alpha Finance is doing, and they don't understand the value of the individual they've recruited to their team, most likely.
Appreciate that. Yeah, it'll be a part-time thing, and I love their projects, so I'm happy to kind of hop on there and help out.
What are opinions on fruit roll-ups?
Fruit roll-ups. Those are freaking money. Fruit by the foot. Wait, that's not a fruit roll-up. That's a rolled up candy.
I mean, that's so far out of left field, I'm left wondering if there is a protocol called fruit roll-ups, or if we're talking about actual fruit roll-ups.
Well, I'm talking about real fruit roll-ups.
All right. So we're back in the IRL world.
That's what I thought of.
Fruit roll-ups are money. It's a way of
That's
bundling
awesome.
your fruit into a single tasty bite.
Fruit roll-ups, they actually leverage a combination of ingredients to settle tasty bites to your taste buds. It's pretty great, actually. Oh, man.
That should definitely become a ZK rollup product.
Let's make it.
That should be.
Oathbringer, you launch. We'll support. We'll shill, actually.
I don't think I'm smart enough. I don't even know how ZK rollups work currently.
Hey, there's actually a really good, I think it was a Bankless podcast with, what's the name of the person on Starkware? One of the cryptographers, Eli something?
I'll pull it up. I always remember the name of the project better than I agree, it's a really good episode, and it's with so it's called Super Scaling with Starkware, and it is with, well, the one I saw, I've seen several, but one of the ones I saw, the episode on Bankless is called Super Scaling with Starkware, and it's with a few people from...
It's Eli Ben Sasson.
Yeah, these guys are smart. The inventor of the Stark, which is a very specific type of zero-knowledge proof, wasn't even in crypto. He was a cryptographer working on zero-knowledge proofs, like, as an academic. And then he was like, well, what could you use a Stark for? And then it was like, oh, you could use it in crypto. And then they started Starkware. So a Stark is a specific kind of snark, and snarks and Starks are types of zero-knowledge proofs. But it's funny, Oathbringer, you're saying you don't really know how zero-knowledge proofs work. Like, there's so many things that we use all the time, we don't know how they work. Like, half of what my computer does, I don't really know how it works, but I know how to use it. And I don't know that very many people, other than developers, will ever need to know much about how, say, zero-knowledge rollups work, except for to know, hey, I can transact on it cheaper, I still get Ethereum security, or security of whatever it's settling to. If you had like a rollup settling to Avalanche, you're kind of inheriting Avalanche security. and hey, maybe you get privacy for free, depending on how they build their rollup. So anyway,
Yo, I've got to make a comment here. So I've been freaking out about computer running slow, right, at the beginning of the stream, and it's chugging along, but it's still a little bit slow. And as I look at what's going on here with CPU usage, Google Chrome is at the top of the CPU usage on my task manager right now. And I'm looking at Chumby Valley and OpenSea and CoinGecko. And my first thought is one of these protocols mining crypto on my laptop right now? That's my first thought.
Or it could just be that Chrome's really inefficient and you need to use something else as a browser.
Seriously.
Like, I mean,
I
Chrome's
need to get Brave on this.
Yeah, I've been liking Brave a lot.
I've been using it a lot more on my main machine, than the crypto laptop.
Yeah.
But the Crypto Night laptop hasn't been used for Crypto Night stuff in a long time. But now that it's become the word on the blockchain laptop, I need to make some updates. But that's just hilarious to me. Like, we're running a live stream, we're running a video call in Discord, we're doing all these things, and Google Chrome is the one using the most CPU power.
Yeah, that's funny. Hey, Show, glad to have you here.
Excuse me, I believe it's Scow.
Is it Scow?
I believe it's Scow. And he's also Onyx in Halo, so he demands respect,
S Chow is how I say it.
It is Scow, yeah.
Oh, it is. Okay.
S Chow works too. That's what all of my Asian friends in the Philippines and Taiwan call me.
Okay.
Nice.
Are you from over there, or you just have a lot of friends over there?
No, I lived over there for a couple of years. I'm originally from Canada, so I've got, funny enough, growing up in Canada, there's just a pretty large Asian population there, at least in Alberta. So yeah.
Nice.
S Chow. That's Scow, whatever.
Scow.
S Chow. My name will probably change, not nearly as much as I don't even know what to call. Yeah, it's Mark's. I don't like other than I know it's Mark, but
yeah, his name changes all the time. He's just kind of flexing that he has Discord Nitro. That's secretly he wants to show off his wealth by being on the premium. Just kidding.
Discord
Nitro.
I
think of you still as Cloudmonger.
I was gonna say I usually just go by Cloudmonger, one of the two. But I have Scow in here because I know like a handful of people in Discord, like IRL. So I should probably actually like care about my identity a little bit more. But this is, I think, the only server that I have my last name in there. So whatever.
Oh, is Monger your last name?
No, I wish. Oh, dude, that'd be sweet. I should change it. That'd be great.
Go to your birth certificate.
Yeah, right.
Good to hear your voice again, Scout.
Appreciate it, but yeah.
Oh, Scow is your last name.
Yes. Yeah.
Oh, okay, cool. Yeah, we've interacted a lot on this Discord text chat, but I've never spoken with you. And you guys game together, is that right?
Scout carried me hard once.
No.
One time.
I've played a little bit of Apex lately. You guys should join me. I'm a noob, but I'm less noobish than I was a few months ago.
Scout, do you know Flim?
Apex. What's that?
Do you know Flim?
I know of Flim.
Okay.
It was kind of actually crazy. I only know Flim originally from his Twitter.
Mm-hmm.
And then I didn't know that he was the one that got Depeche Mode into crypto. And anyway, I know Depeche Mode personally. I'm actually kind of like his accountant. Every once in a while when he hits me up, I help him do his books. So
I like that.
Yeah, I've known him for a former CPA. I have to make sure that caveat's thrown out there. I've been a CPA, went to school for it, got a master's degree in accounting, all that stuff, but I haven't been a practicing CPA for a minute. So yeah, I'm actually now in I spent the last 6 years doing product management and product strategy at a SaaS company in Utah, a few SaaS companies in Utah. And
which ones? I've been working at a SaaS company in Utah for like 5 years.
I'm working at Canopy.
Oh, okay. I've heard of
Yeah.
them. I hear good things.
So, yeah, so I'm now out of product, and I help out every once in a while when they pull me in and want to chat. But I'm working in partnerships and business development now. They move me around. So yeah,
But
it's
you're
been.
not based in Utah, are you? You're in
I'm
Arizona.
not. No, I just moved to Oklahoma actually,
Oh, you
just
did?
on a whim with my 4 kids, and drug my entire family across the country. It was great.
Where in Oklahoma?
We're just outside of Oklahoma City.
Okay.
So
I drove through there one time, stayed in Oklahoma City. It was during the height of kind of the earlier days of COVID. Well, it would have been November of 2020, so kind of that first year of COVID. And it was kind of a ghost town because of all of that, but it was really pretty there. I went on a run, stopped by that monument for the Oklahoma City bombing, which was really sad, but seemed like a cool area. Really flat, not very mountainous, which is fine.
yeah, it's an understatement. Yeah, growing up, so I basically grew up in the Canadian Rockies. I was in southern Alberta. I my second home, if you will, was in Glacier National Park. So I've been surrounded by mountains basically the entirety of my life. Moved from there down to Utah. I've been there for 15 years, and then we moved here, which is very flat, very chill. It's super low key though. Like Utah to me just gotten more and more chaotic, and I come back. Like I'll be at I scheduled my work travel around the lunch, the crypto lunches.
Nice,
Yeah.
nice.
So I postponed my flight. I usually fly out Thursday morning, like super early, and now I'm like I'll get home at 2:00 in the morning Friday.
Wow,
flying out.
we're gonna have to
late.
join you for the next crypto lunch then.
But that's just because I gotta be at the lunch. I'm like in full degen mode at this point. I just full disclosure. I just bought a bot for my NFTs, so I'm trying everything. But it's been like a really fun ride. I've like flipped. I think I'm up 10 ETH in the last 4 weeks, which is pretty good. Not happy with where the market's at, but I don't really care about American dollars at this point. I started with I think a half ETH and have turned it into roughly 10 to 12, I think, give or take.
Really good.
So it's just been fun. So I've been full degenning, but I've been enamored with your stuff, Rhett, because I'm like, I need to play the other stuff and kind of start diversifying outside of like the ridiculous art that will at some point die. I'm super bullish on the tech behind NFTs, but I think that the culture and everything behind it right now is like slowly going to fall away, and we're going to be left with smart contracts and how people are actually building utility into NFTs. So
I kind of align with that.
Yeah, I've been a Bitcoin. I wouldn't say I'm a Bitcoin maxi. I view Bitcoin as like my 401k long-term kind of hodl position and stuff. And Ethereum lately has been, I would have said I was a maxi like a month and a half ago, but over time, I think I've slowly just turned into a crypto maxi. This is all I want to do. It's all I want to spend my time on. I think it's the future, but yeah. Anyway.
So you would have said you were a Bitcoin maxi a few months ago?
So a while back, yeah, I was on the train. It's kind of funny because if we went back, I was asking like when there's going to be a pullback. I thought that the pullback would be Q2. I thought it was going to be early Q2. And I thought we'd be going down to like 30K. I actually got a text from one of my friends who I said it to, and he's like, "There's no chance, whatever." I'm like, I've been talking about potentially like selling my house, so I've got liquidity to buy a pretty heavy dip. Like that's how I guess I was. The dip came earlier than I thought, and I just anyway. So I'm the more and more I've learned about all of these other chains, the more I'm like just amped about the different utility that they each bring. Like the Arbitrum, my experience with Arbitrum is like blown my mind after being so deep in Ethereum and being like, whoa, what? Somebody actually built a chain that transacts pretty quick and clean, and it's pretty cheap. Like this is pretty great. Like I can actually like play here and live here and not have to juggle. Like it's like gas has ruined my sleep patterns at this point, to be completely honest.
Because you're eating too much beans.
Yeah.
It actually makes me ask the question, like, why, like, these protocols just need to launch on Arbitrum, like, build it and they will come kind of deal.
Rari
It's
Capital
funny.
launches on Arbitrum Monday, I think. I think that'll bring up a lot of liquidity to Arbitrum.
Nice.
Arbitrum's UX is so nice, and yeah, it's awesome that it's like, oh, hey, this thing's cheap, fast, and it settles to ETH, and so it's highly secure still. And like, if you have Arbitrum go down, you can still just transact directly to ETH, so your funds aren't like locked away or whatever. In the same way that like if ETH itself went down, then you would be stopped from doing any activity. But I'll tell you, so I've used a lot of chains, and I'm not a maxi on any one of them. Some I like more than others, but when comparing like cheap chains like Polygon and Avalanche to Arbitrum, Arbitrum's a little bit more expensive than them right now, like a decent bit more expensive. It's way cheaper than ETH, but it's more expensive than the others. The UX is so nice because when I transact on Avalanche or Polygon, it usually doesn't take as long as like on ETH. Like last night I was waiting for a transaction to clear for over an hour on ETH because I didn't pay like high gas, and then gas went up for a while. And I pay like a higher priority fee. It's not as bad as that on Polygon and Avalanche, but on Arbitrum, they're always basically instantaneous. And I love that because a lot of times I'm trying to do a chain of transactions. So like I have some DopeX, and I was, I'm in this DopeX farm, and I'm able to claim all my DPX and RDPX, and then go redeposit them in. And it takes me like 10 seconds because I click the one, and it's already done, basically. And then I go click the other, done. It's like that UX improvement is so nice.
Yeah.
So nice.
My thing about Arbitrum is that, Avalanche and Solana are benefiting from the ability to market cheap transactions, right? I mean, look at this. Solana.com. I'll put it up here on stream. So you go down, it's like, oh, here's the number, 52 billion transactions, 853 per second, an average cost of 0.00025 cents per transaction, right? That's really nice marketing to start out. But like, if Avalanche goes to $2,000, it's, it can suffer a similar fate to Ethereum, where it starts getting more and more expensive. And I noticed that actually happened with Avalanche, because when I first bought some Avalanche, it was around like $70, and then it pumped to 140. Like, it was, I don't know, November or something of last year. And then I started transacting on Avalanche again, and I was like, wow, like, I'm still paying, the same fee in Avalanche, but Avalanche is so much more costly now that I'm losing more money, right? And that's exactly what happened to ETH. And it's like, without the scaling aspect, you're subject to all the layer 1 problems of transaction costs. No matter how fast you are, right, or how cheap you are, it will still get more expensive over time rather than less expensive over time.
Yeah, I think so. If anyone here watched Up Only with Vitalik, he talked a little bit about this, how kind of like any highly successful chain becomes a victim of its own success to some extent if its success is outpacing their improvement in scalability. Because if the asset goes up in price and usage goes way up, then suddenly your transaction fees are much higher. So, some of these chains have higher throughput than ETH, but like, if you took any one of them and you said, we're going to take your native assets market cap to what ETH is and your volume of activity to what ETH is, many of them would be not as cheap as they are right now, but I'm also not against. I'm not anti those chains. I think one thing that's been nice is they've helped introduce more people to DeFi and crypto, because
Agreed.
I have friends that I'm onboarding right now, and they're like, "Hey, I want to do some DeFi stuff," and it's like, "How much money do you have?" Okay, if you have less than what to most people is a lot of money, then we're gonna need to look at either Arbitrum or Polygon or Avalanche or Phantom or Solana, but not ETH, because say you're doing stablecoin lending, you only have 10 grand. Like, just to deposit into the stablecoin lending pool, it's going to take you a while to make back your gas costs. And this is coming from a big ETH lover. So, but yeah, you're right that like all chains, I think, are going to have to adopt roll-ups in order to like outstrip usage. Otherwise, they'll become victims of their own success as well.
Yeah, and I think it's like important, marketing aside, right? L1s are all the same in the sense that they're limited by the asset price, the underlying asset price, right? And I kind of lost my train of thought there, but essentially saying that they're the same as Ethereum with just more headroom. Sorry, now I remember. They just have a lot more headroom than Ethereum in terms of transaction volume, right? But they do that at the expense of decentralization and security, right? So like, it's just different assumptions and different trade-offs. But I too agree with you that they're super helpful in onboarding people. You know, probably a lot of people who looked at the gas costs on ETH were like, well, I'm not getting into crypto right now. And I'm not trying crypto right now, right? Because if people are getting them with a lot of money, it's, you know, a different story. But
yeah, if you're a whale or something.
Yeah, Solana and Avalanche have been really good for onboarding, I think.
Yeah, I agree. And, you know, depending on your trust assumptions, they can be even great for the long run. I've wondered how much of that headroom is true headroom for some of these too, because there's a lot of people have heard about the blockchain trilemma of like, you know, pick two of security, scalability, and decentralization. But if you look at, there's this new trilemma that gets talked about of if you're a highly scalable blockchain, it's pick two of censorship resistant, low cost, and low spam, basically. And so you have this issue, like spam is this issue where if the cost to transact is like tiny, then you can get a bunch of spammers, and that can cause problems, and it can cause the cost to start going up because the spam can like start eating up so much of the block space. And Polygon actually had this going on where when their volume started going way up, there was like a couple of bots that were accounting for like a third of all transactions on Polygon, and so they raised their gas prices a little bit in order to make it more painful for those bots to just spam the crap out of their chain. So there's kind of these trade-offs there, and I've wondered like, okay, how do you kind of get around that? Once you reach high levels of scalability, how do you deal with the spam problem without like undermining censorship resistance? That's like almost a harder question than this one, the blockchain trilemma, because with this one I think we've kind of shown that. Well, I think we've shown a few things. For one, you don't necessarily need to be a scalability maxi or decentralization maxi. You can kind of move along the spectrum and say, I can be scalable enough or decentralized enough, you know, and kind of strike a balance. But then also like the modular approach where you say, okay, I have a highly decentralized and secure blockchain, like say ETH, and then I scale using rollups. You can kind of overcome that. It took longer to achieve that because rollups are technologically challenging. So this trilemma seems more solved, but the other trilemma is still kind of like an open question in my mind.
Yeah. I want to give
There are
another
a couple of
example
other
there,
problems.
actually.
Yeah.
So you mentioned that Solana increased its gas price, right? Same thing just happened on Harmony. You know, I'm dabbling in DeFi kingdoms over on Harmony blockchain, and for like 5 days you couldn't do anything on the blockchain because there was an overwhelming amount of transactions basically spamming the blockchain, right? So, you know, transaction costs were something like 0.001 of the one token, right? So extremely small, given the one token is 30 cents or something at the time. It's like 17 cents now. But so what happened is they got the blockchain back online, and then they increased the gas costs. But they increased the gas costs by 4x, right? It's still negligible, but if you were paying 0.001 of the one token in gas fees, and now you're paying 0.04, sorry, 40x, not 4x, 40x, and it just you're constantly going this way, right? You're just going up, and it feels bad, even though it's still low, right?
Yeah. Yeah, but if it's low enough, you know, this is something, there's this really interesting cognitive fallacy that a lot of people have, which is that we too often with money, we think in terms of percentages rather than dollars, when you should be thinking in terms of dollars. So I'll give you an example. People will be sometimes frustrated if like, you know, Taco Bell cheesy bean and rice burrito doubles in price. It went from $1 to $2. Like, but that's only $1 more. That's like not that big of a true hit. But people won't blink if like the cost of their house that they're negotiating is like 1% higher, which could be like tens of thousands of dollars, and you should care more about that. So like the kind of the it's a reasoning. It's a problematic type of way we reason about money, kind of intuitively, that most people do, where you should think about dollars instead of percentages. And I've seen some scalability maxis fall into this, where I've seen people who, it was like a discussion of like ETH roll-ups getting cheaper, and then there's like this Solana kind of maxi in there saying, well, hey, even if it gets down to 1 cent transactions, that's still a lot more than 0.0001 cents. And so like, what are you going to do about that? And it's like, in like a percentage basis, yeah, that's like orders of magnitude more costly, but it's so cheap that no one will notice it. No one's saying like, hey, I'm going to use this credit card rather than this credit card because their transaction fees are
0.01% less.
a penny, and yeah, a fraction of a penny rather than what a penny. You're like, no one gives a crap about a penny, you know.
Yeah.
Unless you're living on $1 a day or something, and so the considerations for them are a lot different. But so some of that stuff, you know, like I think we kind of reason about in an interesting way. But I think one thing, by the way, that I think is kind of a hard problem, but a lot of people are working on it, and I'm optimistic that could help with this, is kind of these proof of humanity protocols, and some try to do it in a privacy preserving way, and others in a way where you're kind of KYCing yourself. But like if you had a privacy preserving proof of humanity, so in order to interact with your DeFi protocol, I have to kind of like sign with this proof of humanity so that I can't split my assets across 1,000 wallets and then Sybil attack your protocol so that each of my wallets gets some kind of airdrop, or I can't like spin up a whole bunch of bots and just like spam your protocol. If I had to kind of sign with that, then it kind of solves the spam problem in an interesting way, or it kind of reduces the spam problem, I guess.
I've noticed those protocols popping up, and I'm not super familiar with how they work, but I think innovations there are going to be really big, really important.
There's different approaches, yeah. I've been watching a number of teams that work on it, and like one approach is like you submit a bunch of info about yourself that other people verify and say, okay, this person seems to be a real person or whatever. And so then you're kind of KYCing yourself. You're like, hey, here's my Facebook prof and my Twitter handle, and here's like kind of like, and then a person can review that, or a number of people can review that and say, this person looks like a real person and not like a bot. So if you don't care about privacy, that's kind of a reasonable way to do it. And then there's this other kind of approach where if you were smart, and you could use some machine learning for this probably too, but if you were smart about like, hey, I'm going to look at this wallet activity and see what it's done in DeFi and how it's operated, etc., and then use some decision making, either heuristics or even kind of train a model to target certain kind of characteristics to say,
Rhett over here flexing his machine learning expertise. That's what Rhett used to do, by the way.
But like if you were like a really seasoned DeFi user, you could probably look at someone's wallet activity and say, this looks like a bot or a person, you know? And then if you had a bunch of people reviewing that, you know, just kind of activity on wallets, and then that you build up this kind of training set of, hey, this sort of activity was done on this wallet and we think it is or isn't a person, or here's other evidence that it is or isn't a person. And then you train a model on that. Then you could say, hey, we don't need to know who owns that wallet, but its activity appears human-like. And then, you know, if you have a high humanness score according to this thing, then you get to use our protocol. You know, you'd have to do it in a way that's like not super gameable, because then I could like build a bot to game your model and all. There's all kinds of kind of adversarial thinking you have to do there, but there's some of that sort of thing being done by some teams where they're trying to kind of say, we're going to look at your DeFi activity and then give you
determine
some kind
whether
of score.
You're a human. That's cool.
Yeah.
We got a question from Large Croissant here in the chat. What's been your experience with yield farming, and what is the best approach for someone wanting to get their feet wet with a limited amount?
I've done a fair bit of yield farming, actually.
So just to clarify yield farming, right? Yield farming is when you take liquidity provision, where you're providing liquidity in the form of two assets in equal amounts, so that people can leverage those assets to trade, right? But also optimizing your rewards by looking for incentivized pools. Is that correct, Rhett?
Yeah. So generally speaking, a liquidity provision pool, so you're facilitating exchange trades, like Uniswap trades or whatever, where there are additional incentive tokens, are usually called yield farms. And sometimes you'll just hear yield farming and liquidity providing used interchangeably. I don't really have a strong opinion on that, but it's like, okay, if the Alchemix protocol says, hey, we want deep trading liquidity for ETH and Alchemix so that it makes it easy for people to buy ALCX tokens without a lot of price impact. So we want a really liquid market there. We'll take a bunch of our treasury and pay people to provide liquidity, which Alchemix is doing that right now. And then they're doing other stuff to get more liquidity too. They're using Olympus Pro to bond liquidity. Not that it matters that much, but
I noticed that Sunday
actually...
Swap was doing the same thing on Cardano. They're just going to start with traditional
bonded
yield,
liquidity, or
not bonded
yield
liquidity,
farming.
yield farming.
Okay.
Incentives.
Yeah. Yeah. So if you have deeper liquidity pools, then people can do more trading without a lot of price impact, and makes it more healthy in a lot of ways. So, but yeah, so the way these automated market makers work, which is most of decentralized exchanges, the AMMs, you provide liquidity into a pool generally with like equal dollar amounts of the two assets, and then those equal dollar amounts are kept in parity, which means if the two assets price diverge, then you are rebalancing into the less valuable asset. So if they price diverge, you're worse off than if you just held the two assets, if they price diverge too significantly. And so if you say, hey, I hold these two assets, say I hold Bitcoin and Ethereum, and I think one of them is going to take over the world and the other one's going to go to zero, but I don't know which. If that's what you believe, you should never liquidity provide, because as that plays out, you will be rebalancing into the one that goes to zero. Instead, you should just hold both individually, right?
Yeah.
But if you're
also,
hey,
on the flip side, it also reduces the impact of a big gain, right? In that way. So one of them goes to zero, you'll rebalance into the one that goes to zero until you went to zero. If one of them goes really, really high, you'll be rebalancing into the lower one, right? And therefore not participating in the gains associated with the asset in the pair that's going up. As much, right? As much.
Definitely. Yeah, so the play here is liquidity providing's risk is relative to the correlation of the two assets. So if you're providing liquidity between Ethereum and Rocket Pool's Ethereum derivative, RETH, or Lido's derivative, Ethereum derivative, STETH, so ETH, STETH on Convex, your
Convex
risk is
being
very
the protocol
low.
here.
Yep.
I've realized that protocol names get real confusing real quick, I think, for people. even people who are in crypto.
Yeah. So Convex is a place where you can provide liquidity. If you provide liquidity between ETH and STETH, or two different stablecoins, DAI and USDC, your risks are really low. Your yields usually aren't going to be that high either, but relative to the risk, it's quite good. Like you can get 6-7% on ETH STETH, and you have very little risk. And if you like ETH, that's a great way to earn yield on your ETH. Great. The ones that are higher risk are usually with these newer assets that have not yet, they're less correlated with ETH than STETH is, and so you're compensated for bearing higher risk by getting higher kind of yield farm rewards. So there's like a pro and a con there. It's like a little bit more degen, there's more upside, more risk, and so if you did like ETH ALCX, you're going to get much higher. Or like, for instance, the RDPX ETH yield farm on Arbitrum right now gives like a 200% APY.
Let's take a look.
But RDPX and ETH, you can check my numbers. We'll see if I'm relatively accurate.
Let's see. What is the actual Dopex URL?
I'll see if I can beat you to it. Let's see.
Dopex.io on Twitter. Boom. I'm there. Welcome, Hateful and CSLR.
So anyway, so there's some, you bear some higher risks if it's with a newer, like lower market cap asset that is less likely to be highly correlated to ETH. There's a different kind of yield farm where you're providing liquidity between, say, ETH and a stablecoin, like ETH DAI, ETH USDC. Again, what you're basically saying there is I think ETH will end up trading sideways. But it's one of those things, too, where if you're like, hey, I'm a big believer in ETH. I think we're at the top of the market. I think we might have a crash. Well, what you could do is switch all into stables. Or what you could do is say, I'm going to switch half into stables, provide liquidity with ETH, and as the market crashes, I'll be rebalancing into ETH and being paid to do so. And so it's like a way where you could say, hey, that's a way that I could kind of take gains, but I'm still like partly in ETH, and I'm, as the market crashes, I'm getting more and more ETH due to just the mechanics of how that rebalances. So some people like to do that. If you're like, oh, the market seems a little frothy, I'll go provide liquidity between ETH and USDC, or AVAX and USDC if you're in AVAX instead, or whatever.
I'm not sure that Dopex will show me the farms without
connecting a wallet.
Without connecting a wallet, which I don't have one to connect here. Just have the test wallet.
I did just pull up MetaMask. I did this yesterday. I just created a dummy MetaMask. Can I share my screen? Because I have a dummy MetaMask here.
You can. I would have to make some changes to one of the scenes to get you in there. Why don't you just... Oh, nope, never mind. It just didn't load. Here we go. We got it.
Okay, so RDPX and wrapped ETH, yeah, 211%. So you provide liquidity there, you're getting a really high APR because you're getting trade fees, plus they're just giving you both DPX and RDPX for providing liquidity there. So that can be nice.
What is this 517-day countdown?
That's, I think, how long they're incentivizing that pool.
But is that also like a set amount where if they reach a certain amount because liquidity is so high, they'll turn it off faster?
I don't think so. No, I think it's one of those things. I'll have to check. But I think it's one of those things where they say, hey, we're setting aside this much DPX and this much RDPX per week for yield farmers that we will be paying out for months, and it'll like kind of step down over time. But it's like we're giving out this much a week, and so like if a bunch of people withdrew liquidity from this pool, you would grab a higher APR because you'd get more of that week's allotment. But it won't run out faster in time because I think it's like, hey, this is how much we're emitting on a time basis.
Yeah. They have a weekly emission schedule, right? So
yeah. Mm-hmm.
So then they can go all the way to the end of this 517 days without running out of incentive tokens. Cool.
Yeah.
Very cool.
And then obviously there's also, with yield farming, you can add leverage to it with things like Alpha Homora. And if you look at Alpha Homora on Avalanche, there's some really good APYs there right now. Especially the AVAX stable pairs, where you're providing liquidity between, say, AVAX and DAI or AVAX and USDC. There's like, I was looking yesterday, there's several of those who have APRs above 400%. So you're like, hey, we're in kind of a bearish market. I can be providing liquidity with a stable now. So it's, doing kind of what I described, where you're kind of rebalancing into AVAX more.
While other people are trying to sell AVAX for stables, right?
Yeah, and then, so you're rebalancing more into AVAX, and you're getting these high payouts, and so you can get a 400% APY. But you're taking leverage, and so the way you take leverage can add risk. If you take leverage in AVAX, then you're betting that whatever you borrow in, you're betting against. Right? So if I borrow dollars to buy a house, I'm kind of betting my house will be worth more value than those dollars in a sense, like from a profit maximization standpoint. If I borrow AVAX to provide liquidity between AVAX and USDC, I'm betting that AVAX will perform more poorly because as AVAX goes down in price, my my debt is getting cheaper. Yeah, well, my debt's getting cheaper because if I borrow a bunch of AVAX, my debt's in AVAX, and then if AVAX dumped, guess what? My debt just got cheap. If I borrow both, then I'm saying I don't think AVAX and USDC will price diverge, and so I'm kind of saying if I borrowed equal amounts of AVAX and USDC, I'm saying I think the market will trade sideways. That's what you're saying. And then if you borrowed USDC to LP between AVAX and USDC, then you're saying I think AVAX is going to pump. So that's kind of how you could kind of reason between those three approaches. So if you say, oh, I think AVAX will dump, I borrow AVAX. If I think AVAX will pump, I borrow USDC. If I think AVAX will trade sideways, I borrow both. What's interesting is I discourage people from taking leverage, including myself, but I've broken my own rule a few times. And
I was about to say, Mr. Rule Breaker over here.
Yeah. One of the times I've broken my rule is to provide liquidity with leverage. And I did that during that intense market sell-off when ETH dropped to 1,700. This was like what, May of last year. My debt ratio did not even budge during that sell-off because I had borrowed on both sides of it, and I was providing liquidity between Ethereum and DPI. They're highly correlated, and so like I had friends getting liquidated, and I never even came close. So it was like, it turned out to be less risky than it might sound. It turned out to be less degenerate maybe than it might sound. And actually my yields went way up because trading activity went up. So it's like when the market sell-off happened, my APY like doubled, and my debt ratio stayed static, which is great. But then in this most recent market downturn, there's some assets that I decided to, they went down like 90%, and I'm like, ooh, that looks tasty, and I don't have income anymore because I quit my job to focus on crypto, so I'm going to take a little leverage in dollars to buy these assets. Well, then they dumped even harder, and that hurt. And so I think
ultimate pain. There's a hot sauce called Ultimate 100% Pain, Rhett. I'll send you some in the mail.
Yeah, do it. That's one of those things where if you're borrowing in dollars, to buy an asset, you're betting, that it's going to outperform dollars. But if you're borrowing some ETH and some DPI to provide liquidity between the two, all you're really saying is, I believe they will correlate in up and down markets. And so like ETH and Bitcoin are pretty correlated. A lot of crypto is quite correlated, but ETH and Bitcoin are pretty correlated. Like at this market sell-off, they both went down. Bitcoin went down less than ETH. And then in up markets, they both go up. Bitcoin goes up a little less than ETH, but they're relatively correlated. So if you took leverage to provide liquidity between ETH and Bitcoin, and you took that leverage in the form of ETH and Bitcoin rather than in the form of dollars, it's I'm not saying that it's not risky, and I'm not like trying to tell you to do it, but it's actually less risky than taking dollar leverage to buy more ETH or whatever.
So I've started to explore the relationship between the Harmony 1 token, so the blockchain's native token, 1, which is actually a terrible name when you're verbally talking about it, because so often you're talking about a number, and for the token to be named 1 just makes it super confusing. But Harmony is, a blockchain that's very similar to ETH, much cheaper. They've sort of changed it up. It's interesting that over the last, let's see here, CoinGecko shows us by default the 24-hour change, right? In price, Rhett, is that? Okay, here we go. That's what I need. So the DeFi Kingdoms game has its own native HRC20 token called Jewel. But the game has gotten so big, right, with over $1 billion of TVL, that my hypothesis is that it's totally carrying the Harmony blockchain. And if you look at how they varied, right, I actually haven't looked at this yet, but 17% in the last 24 hours for Harmony, 17% down, 24% down for Jewel. So it seems like Jewel has fallen faster than One, but not necessarily super substantiating what I'm saying, but I've started to take a look at this, right? Because it's a unique situation. It's like, hey, some huge percentage of all of this blockchain's transactions are driven by this game. So what does that mean for the tokens, right?
Yeah, so you might say, okay, Jewel and One ought to perform very similar to each other. Yeah, I don't disagree with that. I think that makes sense. You'll probably end up seeing that like with Cardano and Sunday Swap. If Sunday, like so far as I saw, like so far Sunday Swap is like basically like TVL wise of things happening on Cardano is like almost all of it. It's like 95% of the TVL on Cardano is in Sunday Swap. It's like, they're just barely starting off to have an ecosystem, and the TVL of Sunday Swap itself is really small, but it's like if it remained that dominant, you're like, okay, Sunday Swap and Cardano should trend together pretty well. Unless one of them just has really bad fee capture and the other one has really good fee capture, and that would play out over time where you say, oh, the activity on Cardano like accrues value back to the ADA token, but not very well to like the Sunday, whatever their token is, Sunday Swap token. And if that's the case, then you'd say, okay, maybe I want to be on the investing in the protocol rather than the application layer.
Yeah, interesting.
You could think about that with DeFi kingdoms too. Like, hey, how good is how well does the Jewel token capture value from the usage of the game, and how well does the One token capture value from the usage of the blockchain? Those things take a long time to play out, though.
You've got the Jewel token, which is what most of the things in game, are denominated in. So most of the game items have liquidity between Jewel and themselves, I guess, since the game items are actually the equivalent of an ERC 20 token as well. So it gets real interesting. It creates some new dynamics, but you pay all your gas fees in One in the game, right? So the blockchain's generating gas fees through the game transactions, and game transactions are way more frequent than, say, a traditional DeFi transaction where you go and you stake and then you're done, right? In the game, you're buying, selling all the time, right? So thinking about, the value of blockchain space, the way that the Bankless guys talk about it, right? Having a big game, I think, is a great way to generate fees.
Yeah, I think that's true. There's kind of an interesting discussion on this with like, and here's a good example of how like current fees or current revenue coming back to some protocol doesn't always correlate. Markets are very forward looking, but like Solana has a lot of usage, has pretty high volume, but the fees are so low that if you look at the total fees paid out, like, so say they do a buy burn mechanism like Ethereum does, so that it's essentially a dividend coming back to Sol token holders every time a transaction fee is paid, if they implemented that. Transaction fees are so low that even with really high volumes, the total fees accruing back to the Solana token holders is like minuscule. And at least right now it is. I'm not saying it always will be. And so then you say, okay, well, the bull case for Solana is the volumes have to go up like orders of magnitude even from here, so that those fees become like appreciable, so that like you start having like a lot of these kind of revenues or dividends coming back to the Sol token holders through the buy burn.
Yeah, makes sense. Appreciate the follows. We just hit 50 followers, Rhett. This is a big deal. That's the first major threshold on Twitch. So
nice. Awesome. McBosserton, glad to have you here. And in case you don't know, we're also in a Discord voice chat and you can hop in. Same with all of you. I posted a link to it at the top of this chat. Protocol token would be safer and less volatile. I think that's almost certainly true. So like in the case of Ethereum,
I think this
if
is
you
in
own
reference
Ethereum,
to Sunday Swap specifically, but I'm not sure.
Yeah, I think so. Yeah. But like taking Ethereum as an example, because it has the most kind of what's the word for it? It has the most mature DeFi ecosystem of all blockchains. If you own ETH, you're basically getting benefits from people who use it for trading NFTs. You get people who do kind of DeFi games, like, or GameFi stuff that is on ETH, which that's not happening as much because of scalability. And then like people who are using DeFi of all kinds, lending and borrowing, DEXs, etc. Whereas if you buy Uni tokens, you benefit just from Uniswap usage. And so I think that kind of diversity does make the base layer maybe less, like you said, less volatile. Because say we have a DeFi bear market, but we have an NFT bull market at the same time, total activity on ETH is still going to be high because the NFT bull market will be offsetting the DeFi bear market, right? So if you have a robust ecosystem, which a lot of these do, like I would say, like ETH is the most by far, but Avalanche, Phantom, Polygon, and Solana all have like a lot of activity happening of various kinds.
I feel like the Solana NFT ecosystem is growing a little bit faster than some of its competitors, which is probably a good sign from a diversity perspective.
Yeah, they're getting a lot of activity. And then
I want to ask you a question about this, actually, Rhett.
Some on some of the others. Yeah, go ahead.
So you just talked about GameFi, right? And this is one of the big questions that I've got. When GameFi ETH, which leads me to this Immutable X page, and I'd like to talk a little bit about Immutable X before we wrap today. So what's the deal? Like, I know a little bit about Immutable X. I've heard that its tokenomics are not great. It has a very interesting staking mechanism, but it's it's a layer 2 built for NFTs, which the reason that's useful for GameFi is because most games leverage ERC20 tokens as items, and units in the game are oftentimes NFTs. They're unique, right? Like that's the case in DeFi Kingdoms, for example.
Like your character's an NFT, and then you have some ERC20 as like the money, or like jewels.
Yep. So the gold is an ERC20, jewel is an ERC20. A stamina potion, for example, is an ERC20. HRC20 in this case for Harmony, but very intercompatible basically with ETH. So Immutable X. We hear the news all the time. It sort of launched fairly early, I feel like. They have their NFT marketplace. What's the holdup? That's what I keep wondering.
Question. Yeah, so yeah, a little bit on Immutable. I personally don't have an issue with their tokenomics. I think a mutual friend of ours that kind of criticized their tokenomics, it was more that there were some upcoming token unlocks from early investors. So not so much tokenomics as, hey, token unlocks from early investors could create, more supply coming on the market. But the tokenomics is kind of typical. If you have the IMX token, you basically share in protocol, in like immutable revenues, basically protocol revenues, which I think is a great way to approach this sort of thing.
Yeah. I mean, I like it. And they have their own NFT marketplace, right? So we've seen Looks Rare come out and really pump since airdropping its token to OpenSea users and things like that. I mean, Immutable X already had a competing marketplace, right? It's just interesting to me that it seems like other things are happening. They're getting a lot more hype and adoption and usage than Immutable, even though Immutable seems like the leading layer 2 solution that will enable GameFi on Ethereum, right?
Yeah, I mean, there's some cool things happening on Immutable. I think the TikTok NFTs are on Immutable, isn't that what they were using? I can't remember, but I think that's right.
That's right. I like this. I like this line right here. Side chains suck. That's funny.
Yeah, that's funny. Yeah, that's a little bit of a that's funny language for an official site, but Yeah, so Immutable, by the way, is it's like kind of an NFT ecosystem built using Starkware. So it's ZK rollup.
Is it
And they
Starkware
have,
or StarkX?
well, Starkware is kind of the general company or whatever, and then and then there's like StarkX and StarkNet. These are some of the different products they roll out. So
Sorry,
like
StarkNet is what I meant. Are they going cloud or are they using StarkX? Do you know the
So
answer to that?
I think they were built not on StarkNet because this rolled out before StarkNet even launched. StarkNet is kind of a more composable version of the Starkware stuff, for those who don't know. But so this is kind of application specific more so, or like like they are a roll up for Immutable X and what's happening, and they're kind of like DYDX is on its own kind of instance of Starkware. And DYDX is for derivatives, and this is for NFTs. Gods Unchained is on there, Illuvium. Like, there's some big shots using this stuff. OpenSea, that's like announced that they're going to be integrating with Immutable X, but I don't think that's come to fruition. When you
nice
launch
to lower
something
gas
like
fees,
this,
certainly.
oh yeah, it would help it would help everyone in ETH. Like if you go to what's that? Ultrasound.money. It'll show what the biggest sources of like Ethereum gas fees are, and OpenSea is like always like toward the top of that list. But I think blockchains and scaling solutions. Yeah, if you go here, yeah, OpenSea is number one. So the number one cause of high gas fees on Ethereum right now is OpenSea by a mile.
And it is way more than Uniswap.
Yeah.
In the last 5 minutes, OpenSea has burned 7.49 ETH.
Yeah.
That's insane. I bet some of that is driven by Creep's Genesis. We got people in the Digital Wind Discord talking about Creep's floor pumping. I'm not very familiar with the NFTs specifically, but yeah, OpenSea could really, really benefit from integrating with IMX.
Yeah, and everyone who uses ETH would benefit. Users of OpenSea would benefit, OpenSea itself would benefit, and then it would pull all this stress off of Ethereum, which would be great.
Yeah. One thing I think is really going on here with Immutable X is a lot of the big projects haven't launched yet, right? Gods Unchained has launched, but I think it has kind of limited scope as like a card game. Illuvium is like a very exciting game that hasn't launched, right? Ecomi is a project related to Disney NFTs, I think. So there's an application. A friend of mine has actually been telling me all about this, but there's an application and a phone app called Vivi where there's random NFT drops that are Disney related, and they've got a marketplace there, but you can't convert to USD, and it's very interesting what's going on there. But there's another game that I've followed the Discord called Ember Sword, which was initially slated to release on Polygon, but when IMX came out, they made this big announcement like, hey, we're going to go on IMX because we want to be on the best blockchain, blah, blah, blah. I think it's mostly that these protocols you see here haven't really launched on IMX yet, right? Like when OpenSea launches on IMX, for example, that's going to be huge. But until then, OpenSea's not on IMX, right? And Illuvium, until it launches, is doing nothing. RTFKT, I think, is related to the Nike acquisition. I believe that was acquired by Nike, if I have that correct. But there's a good question here in chat from Scouza. How does it pull stress off ETH? So we'll kind of backtrack to our earlier discussion about rollups, right? ZK rollups and optimistic rollups. IMX specifically is built on technology called StarkX. Correct me if I'm wrong on that, Rhett. But
right, so it's a zero-knowledge rollup solution.
It's a zero-knowledge rollup solution, which essentially leverages these ZK zero-knowledge proofs to prove. I mean, they're called proofs, so it's in the word, right? It leverages zero-knowledge proofs to prove that these transactions that happened off-chain, right, off of the Ethereum blockchain, are accurate, factual, and valid, and then settles that mathematical proof to the Ethereum blockchain, inheriting the Ethereum security, right? But think of it this way. They're called rollups because you take a bunch of transactions that happened, you bundle them together, and you settle them all to the Ethereum blockchain in one. And gas fees get, split among all those transactions. And so the zero knowledge part is really around generating a mathematical proof that these transactions are valid and accurate, and then settling them to the blockchain. So
yeah, so ETH, so stress on the ETH blockchain is like, there's a lot of demand for doing certain things on the ETH blockchain. It gets congested, so it gets expensive, right? And the things that are congesting it the most are NFT related activities. And I don't see a breakdown on ultrasound.money of what's happening, but there's buying and selling activity, but then there's also minting, right? You can mint NFTs on OpenSea. Minting an NFT is generally relatively gas intensive. It's not like a super cheap operation.
fairly complex smart contract drives a lot of that, right?
Yeah. So the guys from Starkware on that episode that I linked up above, Eli Ben Sasson and I forget the other guy's name, they were saying that using their rollups, they can mint bundles of 600,000 NFTs at a time for 10 Gwei. 10 Gwei, not 10,000 Gwei. So that's like nearly zero gas cost to mint 500,000 NFTs in a bundle, in a batch. And that the amount of congestion savings for Ethereum for that sort of thing is crazy. And then you're saving congestion and people buying and selling, sending and receiving, all that kind of stuff.
To echo McBosterton's statement here, sheesh.
It lowers the amount of transactions, therefore less demand. Yeah, so it lowers how much transactions are happening on ETH itself because you're bundling them and settling them as a big bundle, right? So, I'm not trying to take like a maximalist position, one chain versus another or whatever, but like a lot of people talk about how cheap it is to mint and to mint an NFT on Solana. It's like fractions of a penny or whatever. Well, Mutable X is cheaper than Solana. And it's settling to ETH. And I'm not trying to like say, oh, this is better than Solana or, this is better than that or whatever. I'm just pointing out that that's how big of a cost savings it is to do something on a rollup like this. The bigger point, by the way, for me about like, hey, why is Immutable getting more attention or whatever? Sometimes those things take time to play out, but like I think the way I like to think about it is platforms like Starkware, Arbitrum, ETH, Solana, like platforms, their most important customers are application developers. And it can take a while to onboard, hey, I'm building this, hey, come build it here, they build it and they launch or whatever. And then the most important customer of the application itself are the end users, right? And so that's like, like one of the bull cases for Solana is, hey, even though their total value deposited and is so much lower than ETH still, they're onboarding a ton of developers and builders. They still don't have as many as ETH, but I think they are second to ETH and growing fast. So that's like bullish for Solana. I've said this a few times in Twitter and on Discord. I've been a little bit of a kind of probably annoy people with this viewpoint, but I'm going to say it again. I think, like, for instance, if Arbitrum released a token to try and attract people to use Arbitrum, what I would love to see is most of those token incentives going to builders, and then let the builders use their tokens to incentivize users. So say, hey, if you're an app developer, come build something on Arbitrum, and we'll give you Arb tokens, and then you can use your own tokens to incentivize people to come use your application, because the builders are what matter the most for something like Immutable, something like Arbitrum, Solana, ETH, etc. Phantom is really smart what they've done. So a lot of these chains, Avalanche, Polygon, and Phantom have all launched native token incentive programs. So like on Arbitrum, if you go use on Avalanche, if you go use any one of a number of applications, you'll get some AVAX tokens. So Avalanche themselves said, hey, we have this big treasury of AVAX tokens we're just going to give to people for using Avalanche, which is great. What Phantom did was they said, hey, we're going to take this huge treasury, and if you build an application on our platform and get a sufficient amount of usage, we will give you, the app developer, a bunch of Phantom tokens. I actually think that's the smarter way to do it, right? Because Phantom's most important customer are the app developers, and then the app developers' most important customer is the users, right? So it's like
it aligns the incentives there a little bit, right?
Yeah, so I would get more bullish. What would make me most bullish on Immutable is seeing a bunch of important builders building NFT solutions, marketplaces, etc. on Immutable, and then they'll bring the users, right?
Yeah.
I care about that more for them than are a bunch of people currently using it like end users.
Mm-hmm.
Anyway.
Yeah, I think that's a really strong case. A follow-up question here from Scouse. I assume that causes some post-transactional reporting issues, like pulling up Etherscan would be a nightmare with roll-up transactions. No, so I've already pulled up Arbitrum or Arbiscan here, right? Arbitrum is another roll-up solution on Ethereum. I don't know what transaction explorer exists for Immutable, if there is one, or if it's all through Etherscan. But for Arbitrum, you can leverage Arbiscan, and you can directly scan Arbitrum transactions, directly look through Arbitrum transactions, which are then settled to Ethereum, where you can verify via Etherscan, right? So,
Yeah,
I would imagine that a lot of these roll-up protocols will have either their own explorer or some way of easily telling what's going on via Etherscan.
Yeah, that's a really good question. I could see it going in either direction, and I need to look at what kind of Starkware is doing specifically, and ZK Sync. Those are the two big zero knowledge players. Well, those and then there's a handful that Polygon's developing that are zero knowledge,
Mhm.
and it more naturally fits for an optimistic rollup to kind of easily segue into something like having its own fork of Etherscan, because they kind of need to keep track of the transactions themselves. Whereas with zero knowledge, you can kind of throw away a lot of information once you've produced the proof.
Yeah.
So the question is, do you just do that and then you have all this obfuscation, or do you make sure to keep enough, or have like a partner keep enough information that people could kind of go back and see what's going on?
That's actually really interesting, that particular point. You probably listened to the Bankless episode with Vitalik, the most recent one, where he started talking about blockchain history and where that needs to be stored. Like why we're going to live in a future where not every node has a full history of the blockchain. And, how that's going to pan out is still kind of up in the air, right? But I would imagine a similar mechanism will take place when it comes to zero knowledge proofs, right? Where we're throwing away this information from our platform, but it will exist here in this protocol that is designed to keep a history of all transactions, or something to that effect, right?
Yeah. So the general idea there, this is just to kind of build on that a little bit. Vitalik puts it probably better than, not probably, Vitalik puts it better than either of us, but what he, kind of the way I view some of what he said is like, hey, if you do it in the right way, a blockchain can keep from having too much state creep, and that causes like maintainability issues by throwing stuff away if you've kind of proven certain things about the history, and so you don't need to keep it. So then it's like, well, is that lost forever? And his point was like, hey, there are whole projects whose whole point of existing is to surface history to you, Etherscan being one of them. So what you'll end up probably having is, okay, for the blockchain to be valid itself, validators don't need to keep all that knowledge. But as that stuff's happening, Etherscan, and he named like 4 others, Etherscan and others like them, they will store that information on some server or group of servers or whatever, in order to provide the service that they provide. Yeah. So I imagine that's probably how zero knowledge rollups are going to play out as well. Is you'd say, okay, there's a lot of demand for people to do this. Either we ourselves or some partner will build like a Starkware scan that will look a lot like Etherscan, but when you're using an application on Starkware, you'll be able to kind of view it there.
Yep.
View your transaction history, and I'm almost certainly how it'll play out. Yeah, it's good reference to the Vitalik points. The miners themselves don't need to store that anymore, though, once you implement certain upgrades to the blockchain, and then that makes it so that you could run a validator node with like such insanely like low, like you could run it on like a Raspberry Pi or your smartphone or something, because you don't need to store all this information and sync to it, etc. Because you can use certain things to kind of reduce that overhead. That's an exciting thing, I think.
Yeah. Agreed. Let's see. We have been going for about an hour and a half, which has been awesome because it's been pretty organic. It's kind of weird for me to be coming back into live streaming about crypto because since we last live streamed, I have put in so much time. I've listened to so many podcasts, read so many articles, made so many trades, tried some things, bridged some assets, all of that, and so it's been fun. Obviously, still a lot to learn, but it feels right. It feels right to be talking about crypto.
Yeah, it's true. When we were doing it, whenever that was, you were. I mean, you've been in crypto for a while, but yeah, talking to you, I can tell you've been gobbling up Bankless and some of those others.
I really like the Bankless podcast a lot, actually.
Dude, it's legit. It's
those
really
guys are real smart.
Yeah.
They produce quality content. The roll-ups are great, and they have some incredible guests. I mean, Vitalik has been on Bankless like multiple times, right?
Yeah.
And their top 10 blockchain developments of 2021 was an excellent podcast. The predictions for 2022 was an excellent podcast. Like, just so much useful stuff there.
Yeah.
It's really cool.
Yeah. And this isn't a criticism, but just like a note for those who are, interested in like, oh, what's going on in, I don't know, Solana or something. They are a lot more ETH focused. And that's not a bad thing. I mean, like ETH is I'm a big believer in ETH, and I'm not a maxi, but so I like seeing those developments. But I saw a chat they were having, just the two of them, Ryan Sean Adams and David Hoffman, and they're like, well, there's some of this other stuff people want, covered. We can't cover everything, so maybe someone needs to create their own Bankless-esque podcast for Avalanche or whatever, Solana. And so yeah, it's a really good one. It's more ETH focused. It's not completely there, but it's so good. Laura Shin's is a lot more generalized, and hers covers all kinds of stuff like policy and things. She's also legit. Unchained.
I haven't even heard of that podcast, so I'll probably add that to my list. Yeah.
Laura Shin used to work at Forbes, and she was the first professional journalist to cover crypto full time. And she's been covering crypto full time for years.
Wow.
And she's very good, like, journalist, very good interviewer, and she's she's a lot less. Just her personality isn't very tribal, where she's like advocating one thing or another or whatever. But also, like, she pointed out, and she got a lot of heat on Twitter for this, which I found hilarious. But she pointed out, like, hey, for my own journalistic integrity, I'm not going to own any crypto since I cover crypto. And some Bitcoin people were like, you're not going to make it. You're an idiot for not holding Bitcoin. And she's like, I'm trying to be unbiased here, so I can't own the assets and things that I cover. And she is, no one's fully unbiased, but she's like she's got a lot of good neutrality, and she's got some great stuff. She's awesome.
McBosserton talking about her coming to speak in Utah. That's very cool. What's the time frame on that, McBosserton?
It's happening in March 19th, actually.
Excellent.
And
is it part of Silicon Slopes, or is it something else?
There's a conference being put on called by the Mormon Transhumanist Association in Provo, Utah, on March 19th. And Carl Youngblood.
What a society name! I'm gonna have to go figure out what in the world that means and what they're trying to do.
So Carl Youngblood, who is awesome. He's the former CTO at Mainframe, which was now they're called Hi-Fi Finance, but they're kind of one of the older Utah-based crypto startups. They've been around since kind of the last cycle, probably around since like 2017. He's not with them anymore. He does a number of things. Really smart, really modest, awesome guy. Anyway, I think founded or is deeply involved with the Mormon Transhumanist Association, which is this kind of nonprofit kind of sort of association of interesting. So they put on a conference every year, and they have they tend to do, I've never been to them, but they tend to do two keynote speakers, one who's like a little bit more transhumanist and the other who's a little bit more Mormon or whatever. And Laura Shin is one of the keynote speakers there. The focus of the conference this year is kind of decentralization and stuff like that. So it's not just crypto, but there will be a lot of crypto content, and then there's some content in some other areas that I love, like nuclear energy and stuff. And yeah, Laura Shin's one of the two. Oh, he founded it. Yeah. So, thanks, Mick Bosterton. You know more than I do. I actually only just met Carl Youngblood like 2 weeks ago, but he's an awesome dude. Really good. Really good actor in the crypto space.
Yeah.
And,
I wanted to make a call out here, Brett, real quick. Brett.
Yeah.
How many times have I talked to you? So the Large Croissant just posted in the channel. We are starting an Instagram, eventually a Twitter as well for our community and our podcast. So if you are interested, go ahead and give us a follow. You'll see us on Instagram. We'll have some different types of posts. Certain snippets from our chats or whatever other type of content we put out are going to be grabbed and posted in short form content like reels and things like that. We really feel like it's important to be educating people about crypto right now. I know Rhett especially feels very strongly about this, and so do I. So feel free to give us a follow, whether it's on Twitch, on Instagram, and join our Discord as well. In the future, we'd like to tailor content to what people are wondering about. And so, we'll have a channel in our Discord that's going to be related to questions, and we can have some voting and things like that, and actually have this very crypto-friendly, community-driven effort to learn more and go to the moon together. Or get Lambos, or whatever you want to call it, right? Even though our Lambos right now are all going to be little plastic figurines. But yeah, I think we'd appreciate any support there on the social side.
Would appreciate feedback too.
Exactly.
I saw Good Season just joined the voice chat. I'm glad to see you here.
Yeah, what's up, guys?
Hey, good to see you. Good Season's a guy I know in real life. One of my best friends is one of his best friends we met a few years back. Cool guy. Used to own his own suit company that he sold recently and is doing
Very
more
cool.
NFT stuff.
Are they suit-themed NFTs is my first question.
No, that would have been really cool.
Hey, it's never too late. I'm still, I've got one NFT right now. His name is Hippie, the Hype Hippo. He was a rug pull, and I don't own any NFTs that weren't rug pulls because I only have 2 Hype Hippos. So I am in the market for a new profile picture. So,
Yeah.
it's the cost of learning, right? Rhett often talks about the cost of learning, right? High gas fees, whatever. You go through it, you're trying to learn. It's about learning. And I learned how to mint NFTs, first of all. I gained a profile picture, and I lost everything else. So, but that's okay. That's okay.
Yeah. Hey, Matterhorn's here too. Good to see you.
Hey, Matterhorn. Mr. Time Frogs himself.
Oh yeah, I see the little time logo, or no, that's an Avalanche logo on the necklace. That's cool.
Yeah. That's been interesting. We'll have to do an episode specifically on Olympus DAO and time and the developments going on there, Rhett. I think it'll be really interesting, especially with time talking about turning off bonding, right? Yeah, this divergence you're talking about.
They already turned it off, yeah, and it's funny. So Matterhorn, like we talked about this on the crypto text chat a few weeks ago, but like I was a little bit kind of I wasn't loving kind of the personality of the founder of Time and Abracadabra, etc. Danny. I have since listened to a number of interviews with him, including a really good recent one with Andre Cronje, or how do you say his name? He's founder of Yearn and some other things. They're building a really cool thing on Phantom that is actually Ohm related as well. It's kind of like related to both Ohm and what's happening with Curve and the Curve Wars. Anyway, there's interesting stuff.
I'd be really interested, Rhett, if you could post a link to that in our Crypto Night Discord. Maybe Digital Wind as well.
Oh yeah, for sure. And I thought Danny, like I take back some of my criticism. He has kind of a big personality, and he has gotten into some fights with some people. That happens. It happens to everyone. But he was really cool in the interviews I've seen with him, and just kind of really wanting to add value to the space. And he ships a lot, and he's out there just trying to kind of build a better finance world, and collaborating with other people that I love. So anyway, I take some of that back.
Very cool. Very cool.
Take all of it back.
I need to learn more there, to be honest. I spend a lot of time on Olympus DAO, right? I feel like they're kind of a bleeding edge innovation team, and they build quickly, and I like following what they're doing, right? But pivoting over to McBosterton's comment here, I'm not sure that the real world is ready for that kind of roast, McBosterton. The cost of learning Ethereum is still less than the cost of learning at college. We need to keep crypto on the DL. If we go out there saying stuff like this, then people are just gonna become active haters,
That's hilarious. I love that.
That's a great comment.
A lot of people I've heard there's a big trend of people foregoing college now. And if you're the sort of person who can learn really well in other ways, like, I had a good college experience, but if you're the sort of person who can learn well in other ways, like I'm all for that. Had a bunch of coworkers at my last job, like some really awesome devs who never went to college. They just kind of learned to code and then proved they could code and got a job, and
that's been kind of the biggest departure, I think, from the traditional college route in the tech space. Now we've probably got, some very young people who are minting JPEGs and becoming billionaires. So I'm not sure how sustainable that is, to be honest, but it's probably happening. Oftentimes, though, people with development experience are also more successful in that space, because they can, create the generative art, and they can do more than just, say, somebody with artistic skill but no development skill.
Yeah.
But,
yep, I agree.
Well, what do you think, Rhett? Should we wrap it up, or should we put out one more call for questions, or?
Yeah, let's just do one more. If anyone wants to chat on voice or on the text. At first, people were hopping in on the voice and kind of chatting with us about whatever, and then I think I started talking too much. So if anyone wants to jump in and talk about whatever.
Does anybody know where I could sell a kidney? Times are really rough right now, guys. Real rough.
I know.
Yeah, if I wasn't
so bad.
You should mint a photo of a kidney and sell it to try and recoup losses.
Hey, a kidney NFT project. Yeah, it's money.
Why not?
I love that.
Wonder if you could stake a kidney somewhere. You get a decent a yield of some sort. I don't know.
Yes.
Oh man,
I love it. Turn my kidney into a steak. Serve at a steakhouse.
I mean, kidney function is a scarce resource, and so if we can figure out how to transfer my kidney function to somebody else without me losing my kidney, I'd say that equates to staking a kidney, right?
Yeah.
That VE33 project that was it Andre and Danny are working on is pretty cool sounding.
Yeah.
We'll have to see how that ends up playing out.
That VE means it's a governance. It's a style of governance that's emerging, right? If I have that right.
VE stands for vote escrow, I believe. Is that what the VE stands for? Say that again.
I can't remember what the VE stand for. I thought it was like venture or something, but I may be wrong.
The E is definitely escrow, I think, and then I think it might be vote escrow. So the VE model of tokenomics, as like a real quick high level, and Andre in this YouTube video I'll link, it explains it way better. But the VE tokenomics model is what has made Curve such a success. Curve's TVL has gone to like 20 billion plus, more than 20 billion, mostly because of the VE model. And there's some really cool things about it. And then Convex builds on top of that in a really smart way. And some people have criticized the other decentralized exchanges like SushiSwap for not adopting VE. But the VE model of tokenomics can be adopted not just by DEXs, but by lending protocols or any kind of protocol that has any kind of revenues or emissions. And this itself is like a huge big topic, but I would say one of the bigger innovations over the last few years has been the tokenomic design of VE. And so I actually saw kind of a funny interchange between Zeus from Olympus DAO and Joseph DeLong, former CTO of SushiSwap, and Joseph DeLong's been crapping on Olympus DAO, and a lot of people been kind of defending it. And then Zeus came in and he's like, "Why are we listening to your view on tokenomics when you personally shot down VE on SushiSwap and it would have made you the dominant DEX had you not?"
Oof.
So VE33, it kind of combines some
I
cool
saw that
things
tweet.
about the VE tokenomics with some cool things about the tokenomics of kind of the Olympus style model. And there's this cool thing, and this is a really good point that was made by Andre in that video I'll link, but like he made the point that like a lot of important things happening in DeFi right now are protocol to protocol more so than protocol to user. A lot of stuff that's happening with Curve is protocol to protocol. Like the people who are like trying to accumulate Curve and Convex tokens are protocols that want to be able to make sure they have deep enough liquidity for their stablecoin on Curve to stabilize it. And so they're the real customers of Curve. It's protocols, not users.
I think
right?
Curve Wars is another great topic for
Yeah.
a future stream, honestly.
Yeah. Yep. I agree.
That's
And
something
think,
that I also have a limited understanding about, but have begun learning about recently.
Yeah, there's some cool developments there. And then, there's similar things like Tokamak is just kind of getting started, but I think the main customer of the tokens will end up being protocols, not users. And then, similar with a number of these others, is that there's a lot of value in creating good kind of synergistic systems for protocols, like, kind of, in the software world, you have a lot of B2B software and you have a lot of B2C software, right? So VE33 stuff, like all of their early tokens will be given to protocols, not users, and then those protocols will get to choose how they use them. And there's some cool stuff happening there, but it's meant to be focused on kind of adding value to other protocols in a sense. And tell me if you kind of disagree with my take, Matterhorn, but that's how I view it. And and I think that's like there's a lot of low-hanging fruit there. A lot of the stuff that's gotten a lot of attention has been stuff that's protocol to customer. Like, hey, I can go use MakerDAO to go, mint some DAI, take leverage, and blow myself up in a down market. And but like but there's all this like really important kind of infrastructure that's being laid, and more that needs to be laid to like for protocols to help other protocols to kind of operate more effectively. Like, one thing is to help you maintain the peg of your stablecoin. Another is to like help you get liquidity. That's like Olympus Pro is like helping with the liquidity problem. I think Alpha Homora is helping with the liquidity problem. So is Tokamak, and then there's all these different things. So anyway, that's like very high level.
Cross chain. Like I know that VE33 is essentially going to be set up for the Phantom network. But is the goal to eventually like have it all to be multiple chains using the same protocol?
That's a good question, and I'm not sure. I know, like you said, I know they're launching initially on Phantom. Andre's doing a lot of stuff on Phantom and is an advocate for Phantom.
The top 20 protocols are the ones that are going to be given the what is it? It's essentially the worth of coin.
Mm-hmm. Yeah, I think that's right. Yeah. And it's at least starting on Phantom. I don't know if it goes cross-chain. I kind of hope so.
Yeah, that would be cool.
Like if that network became a it implemented its mechanics in a really value additive way to other protocols, and then it launched on Phantom first, and then also launched on AVAX and Polygon, Solana, Arbitrum, ETH. I'd love to see that.
A long time ago, you said something about how there's a good chance that in the future, each chain is going to like specialize in a certain realm of what crypto does. And I guess Phantom is really going to attempt to be like the DeFi go-to. I mean, it would take a lot. Ethereum would have to really take a crap, I guess, for that. But I don't know. I'll ask you what you thought about that.
Yeah, that's a good question. I think there's different trust assumptions with these different chains. Like ETH is obviously more costly but more trustworthy. Like it's more decentralized and secure than any of the others by a lot. And then Solana and Phantom are a lot more scalable. And then there's others that are highly scalable too. And so which ones kind of dominate which sorts of applications? One of the ways that I think about it is that because Phantom is very cheap but is more centralized, it's likely to get more traction for things where there's higher trust. So maybe like I really trust my credit card company, and so I'd be down to like interact with Visa or whatever, or MasterCard or something via Phantom. But if I'm interacting with a total stranger that I don't trust, maybe like I'm a little bit more concerned. And then there's this other aspect of trust, because there's like the censorship resistant aspect, right? Where when you have fewer nodes and fewer miners and stuff, then like a government could come in and like maybe take your asset from you, because they could actually like probably find and coerce all of the validators, because there's only like 50 of them or something. And so in that sort of kind of adversarial scenario, then it's like, well, what are the things that I would be less concerned about a state actor kind of censoring? It's like, well, maybe, I don't know, my game, my NFT, or like my the skin on my League of Legends character or whatever. I'm not as worried about, but I might be more worried about my my savings or something. Those are just kind of high level thoughts on my side. Be curious what you think, and you as well, Phil. But like, I think I do think it's like different trust assumptions come with different like pros and cons, right? And so Phantom I think is similar to Solana in that they are more centralized but more scalable, but Phantom's EVM compatible and more friendly to ETH than Solana is. And there's pros and cons even with that, but like I don't have a super strong opinion on like, okay, if DeFi becomes like, if the go-to for DeFi is Phantom, some DeFi things are higher cost than others, right? And so like you need scalability, whether it be through rollups or something like this, for something that's highly complex like derivatives trading. Whereas like if you're doing like kind of simple lending and borrowing, it's not as concerning to do it on ETH. Anyway, sorry, I talk too much. What do you guys think?
No, it's totally fine.
I missed a portion of the beginning there, so I'll reserve my thoughts for later. Was sending some messages to our third staff member. I don't know what how I'm gonna refer to large croissant in the future, but yeah, I don't have any thoughts, so I'll step aside on this one.
I've slowly merged away from using Ethereum for anything, just because it's sick how the fees are, and I feel like the brand has been damaged badly within the last 3 or 4 months. And I hope that Ethereum 2.0 will be able to address the problems, but something tells me that like we rely too much on the layer 2s.
Yeah, so that's a good interesting point. So layer 2s do inherit the security of ETH, if done right. So, if you have rollups on ETH, and you say we rely entirely on Arbitrum and Starkware, ZK Sync, and the rollups, you're still getting the security of ETH, so you kind of get the best of both worlds. And there's some other kind of UX benefits to rollups in my opinion, but like, so I'm less concerned about like the reliance on rollups, because a rollup done right, relying on it is still, you're actually kind of relying more on ETH, and then you're just having some good bundling from a sequencer or whatever.
Yeah, the way that they talk about that is ETH becomes a settlement layer, right?
Yeah.
And if you think about it, right, there's so many limitations to a layer 1 blockchain. It's so hard to have everything at once that if you can have a censorship-resistant version of history, right, then you have the most important thing. And I think, I resonate a little bit with that idea, the thought of, scaling up Ethereum enough that literally anything can be settled to it and kept track of by leveraging its blockchain. And these other protocols that interact with it, they scale it, right, for us, rather than needing to scale the blockchain continually, right?
Yeah. So one of the ways that I think about it too is that, there's blockchain serves multiple functions. There's like settlement and there's execution of transaction and things like that. And so for secure and decentralized censorship resistant settlement, Ethereum has an unfair advantage over all the competitors and maybe always will. But settlement is a more expensive thing. And so I kind of think that maybe Phantom and Solana and those, they're more competing with rollups than competing with ETH. And that Phantom, for example, they interact really well with ETH, and so they could become an execution environment that still settles in some way periodically to ETH, and you get the best of both worlds a little bit. And then Phantom becomes a friendly protocol with ETH and a competitor to Arbitrum and zk Sync. And in that sense, so like I get your point about like maybe there's been some brand damage for ETH, and that could be right. But like I do also think that like, I think ETH ought to not really, ETH layer 1 ought to be used by rollups and applications more so than by people. And as we kind of migrate that way and say, well, people will use either rollups or friendly sidechains like Phantom, and then things will settle to ETH. ETH becomes this settlement layer, and then where we live and interact is on Arbitrum and Phantom and Avalanche, etc., Polygon or whatever.
Ethereum's essentially it's the backbone that a lot of these applications are going to be ran on.
Exactly. Yeah. So like, you kind of think about like there's infrastructure for the internet that you don't interact with directly, others built on top of, and then you interact with those. There's all this infrastructure that Google is built on top of, and then you use Google services and things. And I view it that way. And so ETH isn't meant for end users in the long run. ETH is meant for protocols and blockchains to use for settlement. And then those protocols and blockchains, when I say protocols, like sidechain L1s, or blockchains, sidechains, and L1s, and then protocols I was referring to, like, rollups. So to be more specific, ETH is to be used by rollups and sidechains, and then applications deployed on rollups and sidechains, and ETH becomes this super highly secure, super censorship resistant place where all of those settle to. That's kind of my vision of the future, which is that it's not either or. It's not Phantom or ETH, it's Phantom and ETH, and it's not ETH or Arbitrum, it's ETH and Arbitrum.
Yeah. Okay.
I agree. I think it's great. I like Vitalik's vision. The way that I see it is I really just never discount Vitalik, right? Solana, Avalanche, all these competing smart contract chains would kind of not exist without Ethereum, right? So in a way, despite the fact that they've improved transaction speeds and, theoretically scaled Ethereum in some ways, I think that the leadership and innovation coming from Vitalik is irreplaceable at this point. Like, everything he does is something that is new, And so I'm really interested to see what he does. I would say that Ethereum has, people have behaved in an economically sensible way. Like, why would I transact? Why would I purchase Olympus token, right, Ohm, on Ethereum when I can purchase it on Avalanche for less cost and I'm interacting with the same protocol? Like, there's really no reason, right? Layer 2 adoption is where you can get some of those people back, right? Where it's like, oh, well, I can be interacting directly with Ethereum here through this rollup, and now my costs are low again. Great, right? So we'll see how much of that happens. Like, we're going to have a good idea of how much brand damage was really done, right? And obviously, a lot of these more antagonistic side chains have been trying to capitalize on this narrative, right? And that's, done some damage, no doubt. But I think the TVL kind of says it all. Ethereum is massive, and if layer 2s can grow adoption and launch, and assets can get bridged up from layer 1 to level 2 to layer 2, we'll see a lot of changes, in behaviors. It's going to be really interesting to see how it shakes out, no matter what, is what I think.
Yeah,
I sure hope it's seamless. I really do. I hope that I'm not going to have to jump through a bunch of extra hoops, because then I'm just going to run right back to either Phantom or Avalanche, who I can just, have the AVAX and go straight to whatever I need to do. And the price isn't, gouging. That's what it feels like. Just Ethereum at this point. It feels like I'm being gouged.
Yeah.
And I agree with that. And I would echo Rhett's earlier point about, assets being bridged onto Arbitrum, for example, right? When all of the protocols exist on Arbitrum, like, new users will go directly to Arbitrum. They will never interact with Ethereum L1, and they'll never have that feeling, right? It's only us, the people who are using L1, who were there when L1 got expensive, that will even really understand that difference in the long run, right?
But are we going to be buying Ethereum at this point? Or are we going to be using other L1s that we've been using to interact with the blockchain? That's where I'm kind of fearful for Ethereum, because a lot of people are writing Ethereum off as like the boomer chain because it's so cost prohibitive to the little guy.
Yeah, so that's a good question, and something that, ETH, there needs to be innovation happening quickly for that to not be true.
Agreed.
Arbitrum, as an example, is getting, it's scaling up. Like, it's been getting TVL and adoption pretty quickly, and like, who is it? Binance recently started supporting withdrawal from Binance straight to Arbitrum. So you don't have to withdraw to ETH and then bridge up. You can withdraw straight to Arbitrum if you're a Binance user. And they've gotten massive usage of that withdrawal channel. So that's showing there's demand and interest there. But this is a point I've pressed on a few times today, but I actually think the most, like, brand damage, the brand damage I would be most afraid of for ETH, that would make me most fearful that ETH is, like, permanently harmed, would be damage to the interest of developers. Because I think the most important people to adopt a given blockchain or rollup are the developers, and then the developers build applications that are compelling, that bring in users. And so if you see mass departure of developers on ETH and ETH rollups, then it's like, yeah, maybe if you have mass departure that stays away, then maybe you're like, yeah, maybe the rollup centric roadmap, while, like, technically superior in the opinion of many, maybe was too slow, and people all went and started building on Phantom and Solana instead and never came back and never built on Arbitrum or whatever, then that would be like that would be like a manifestation of, like, what you're describing, Matterhorn. But, like, if users depart and use Phantom for a while while Arbitrum, matures, and Starkware and ZK Sync, but there's a huge number of devs still building in those places, and as they mature, you have really, like, compelling applications there. Then all the users come back to use those applications. Users don't care that much. Like, when I'm using a Web 2 thing, when I'm using like Facebook or a Google application or whatever app on my phone, I'm never like, wait, is this using AWS or is it using Google Cloud or is it using Azure or are they self-hosting? Like, I don't give a crap. I use a service that has a consistently good user experience, right? So like, if the rollups roll out and they're sufficiently cheap, and then there's really compelling applications there, user like in 5 or 10 years, probably users won't even know what chain their app is on. They're like, I'm using this app, like my bank is integrated with the blockchain in some way. I don't even know or care if it's settling to ETH or Solana or whatever. But who does care is the bank itself, the devs that are building that, and they want like good scalability and they want good uptime and they want good censorship resistance and good security. So they want some of the things that Solana brings and they want some of the things that ETH brings. So do they build more on Solana or ETH? What I'm saying is you could be right that there could be permanent brand damage, but only if it's devs that they permanently depart. If devs haven't permanently departed, then it's a blip in my opinion. But like, I think in my opinion, if I have the data and I'm investing in L1s, almost all of my investment would be driven not by TVL, but more by where are more of the best devs building.
Yeah.
And if all the best devs are building on Phantom and no one's building on ETH, I'm investing in Phantom over ETH, right? If they're all building on ETH and not Phantom, vice versa, right? And that is one thing that's made me like impressed with Solana. Like Solana's TVL is still like quite a bit, so like much smaller than ETH. In fact, Aave, a single application, and they are cross-chain, but they're mostly on ETH. Aave has more TVL as a single application by double than the second largest L1 after ETH. Like ETH is very far ahead in that metric. But where Solana has got major traction is builders. And I think there's still, from what I can tell, there's still more builders on ETH, but the amount of builder growth, like people, hopping on and starting to develop things on the ecosystem, Solana is like, they're taking off like a rocket. And that makes me think, hey, over the next few years, you're going to see all these apps rolling out that are like highly compelling, and then that'll drive people to the platform.
There's actually a report that was released. I can't remember who put it out. I've seen a few articles and videos about it, where some kind of crypto interested financial firm went through a huge amount of GitHub repositories to kind of ascertain the level of developer growth on each blockchain. I would encourage you to go find that. If I can find it for you, I'll link it to you, Matterhorn. But I think that report was very, very illuminating because there's some teams there that you just don't even expect, right? You don't expect Polkadot to have the biggest growth in developers, for example. Like, we just don't talk about Polkadot very much. But Polkadot was called out in that report as having a lot of developer growth. Ironically, Harmony, even though I've had a terrible experience with Harmony so far, has quadrupled developers or something like that. And so it's very, very interesting to look at it that way. And the people in the end that are going to be responsible for you and others having a seamless experience on L2 is going to be the devs. Like, they have to build the seamless experience, right? So if they're there and they can do it, that's a really important bullish thing in my opinion. If they're not there, they cannot do it, right?
Right.
But
regardless, I think users will probably never again. Non-whale users will never again be using ETH in mass, and that's like kind of by design. Like, if you point that out to Vitalik, he'll say, "Yeah, and that's a good thing." So you're not wrong about that.
I think Vitalik recognizes just the limitations of L1, right?
Yep.
And therefore, we need to have the most important stuff in the most efficient packaged way settling to the Ethereum, to the L1, to the Ethereum blockchain, right? But hey, I think we've gone another 45 minutes, so I think we should probably wrap up here.
Yeah, sounds good.
Last thing I wanted to say. Yeah. Thanks for dropping into the chat, Matterhorn. Totally upgrading the experience here from text in the Twitch chat to voice in Discord. So we appreciate it. But yes, just a reminder, we don't have any set schedule yet. We're going to try and figure that out. It is a huge deal that we hit 50 followers. So that means we will be going live a few times this month. And expect to see some of these videos come out on YouTube and potentially in short form on socials. But seriously, thank you everyone for the support. Thanks for coming by the chat. Thank you, Rhett, the crypto god of the Crypto Night Discord, soon to become the Word on the Blockchain Discord. And we, as always, we appreciate your knowledge. And looking forward to, having varied content on our videos and even getting some people who are working in other spaces in crypto to come on. So it's going to be exciting. I'm really excited about it, honestly, and stoked also to have Large Croissant joining the team, helping us out with some of our socials and things like that, and looking forward to rolling out an audio only podcast format for our broadcast. So with that, I think I will say have a wonderful Saturday to all of you. You as well, Rhett, and everybody in the Discord.
Yeah, same.
We
Catch you guys later.
We will catch you next time.
Thanks, guys.
Bye.